about what past recessions have told us about the housing market. You had mentioned recession earlier, a lot of talk about. Now we're getting out of inflation and that we are heading into a recession. So I just want to talk a little bit about, what that might look like for the housing market. We hear a lot of things about housing crashes, housing bubbles due to inflation and recession. But let's take a look at the data and see what it really says. It doesn't matter if you're someone who closely follows the economy or not. Chances are you've heard whispers of an upcoming recession. I just wanted to share what the experts actually are saying. And Greg McBride, the chief financial analyst at Bankrate, he is saying that 2 in 3 economists are forecasting a recession in 2023. So 2 out of the 3 experts are forecasting a recession in 2023. That kind of gives me a good idea that most likely we are going to see some form of a recession. Another expert says this is not a replay of the Great American Housing Bubble. So as we talk about a potential recession grows, you may be wondering, what a recession could mean for the housing market. So I want to take a look at the historical data to show what happened in the real estate during previous recessions. So a recession doesn't necessarily mean falling prices. It doesn't necessarily mean a crash. If we take a look at this chart, this shows you, recessions dating back all the way to 1980 and what home prices did during those recessions. There's been about 6 recessions since 1980. And you can see in 4 out of the 6, home values went up and home pricing went up. To show that home prices don't fall every time there's a recession, it helps to look at this historical data. Home prices appreciated in 4 of these last 6 recessions. So historically, when the economy slows down, it doesn't mean that home values are necessarily going to fall. Another thing that's talked about is most people remember the housing crisis of 2008. I wasn't in the market at that time. Chris was in the market in 2008. And that would be the larger of these 2 red lines here, where we saw home prices drop by nearly 20%. But today's housing market isn't anything like it was 15 years ago. Here's some key variables in that last housing cycle compared to today. Job cuts. You had 8 million during that last housing cycle. I know we're hearing about some technology cuts and things today, but I don't think they rank anywhere up in the 8 million mark. I'm hearing of people laying off, a couple thousand, 1,500 people. Total jobs in our country was 138 million in 2008. Now we have 158 million jobs. Subprime loans were very prevalent, as Chris would tell you. And this is a huge part of the housing crisis of 2008, where these next, 2 to 3 things is what really caused that. So first, subprime loans were prevalent. People were getting loans that honestly, I think the LO knew they most likely weren't going to be able to pay that loan off. But when you're an LO, you do your job, you offer the programs that your office supplies you. So virtually no subprime loans now due to the mandates, laws, things that came down, processes. You do not get a loan today unless you show that you can pay that loan back. So also, I believe it was ARMS had a lot to do with those subprime loans.
Pay option ARMS, negative amortization, right? Not your traditional adjustable rate mortgage, but the negative AM were probably probably a key cause of that.
Yeah. It's something we've talked about a lot. New construction over the previous 5 years leading into that crisis. So the 5 years leading into 2008, builders put 7.65 million homes on the ground. We are at basically almost half of that in today's climate with 4.6 million. Inventory on the market in 2008, 3.8 to 4 million were on the market. Our inventory today is 1 to 1.2 million. So there's where we get to our supply and our demand. Mortgage delinquencies were 10.1% during the housing crisis, even going through COVID and this current situation economically, we're at 3.6% on the mortgage delinquency. And homes in foreclosure, this is huge. We always hear there's going to be a flood of foreclosures coming and things of that nature. I know some agents that are teaching classes just on short sales and foreclosures, but due to what happened at the subprime loans and to eliminate those, we have a lot fewer homes in foreclosure. I think we've talked about on our podcast before, the percentage of people that have positive equity in their homes today compared to 2008 is quite a large number. So the average of the, go ahead.
Nope, just agreeing. Yeah, absolutely.
So, you know, according to experts, home prices will vary by market as they always do. And they may go up or down depending on your local area, but the average of the 2023 forecast shows prices to remain pretty much net neutral, not losing, not necessarily gaining. We've talked about in our DFW market, we're still expecting, you know, probably a 3 to 5, maybe a tad more appreciation this year. So we've kind of shown you that recession does not mean falling home prices. You know, what does a recession mean? And a recession generally means falling mortgage rates, which Chris can attest to. So research also helps paint the picture of how a recession could impact the cost of financing a home. So as this graph is going to show, historically, each time the economy slowed down, mortgage rates decreased. So when we looked at the last 6 recessions, as far as home pricing went, 4 out of those 6 were in a positive area. When you look at the mortgage rates, they all dropped in all recessions. And we've looked at these different types of numbers before as well, historically. But you know, as far as an outlook on mortgage rates, Fortune magazine says over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points from the peak seen during the recession to the trough. And in many cases, they continue to fall after the fact, as it takes some time to turn things around, even when the recession is technically over. There's always a 90-day delay in anything in the economy, getting the accurate information. Global CEOs, this is from the 2022 CEO Outlook from KPMG, one of your bigger accounting firms. Global CEOs see a mild and short recession, yet they are optimistic about a global economy over a 3-year horizon. And more than 8 out of 10 anticipate a recession over the next 12 months, with more than half expecting it to be mild and short. So bottom line on recessions, home prices rise, mortgage rates go down, historically speaking.
Yes.
So if you're thinking about buying or selling a home this year, we've already talked about, you know, now is the time to be reaching out. Let's connect so that you can get some expert advice on what's happening in the housing market. Chris and I stay up with this stuff on a daily through the work that we are doing, whether it's putting on events, doing these market updates, and just helping our clients in general, keeps us on top of, you know, really what's going on. So get in touch with me. Let's talk about some home ownership goals. All right. So to wrap it up, Chris and I talk about there's a ton of real estate news out there floating around. You can get it off the internet. You can get it off paper. You can get it off the TV. You can get it from your circle of friends. You can get it around the water cooler. You can just get a lot of information, and then most of it comes through right there, that beautiful little device that we all live with, the cell phone, constantly keeping us updated. Reach out to Chris and I. Amy and I's number is 469-369-0873. If you call us about purchasing, we're going to put you in touch with Chris at 214-734-1531 to help you get your financing in order, so that when we go out, we're ready to jump on that dream home. What up, Chris?
All good stuff. Yeah, have a good rest of the week, and you guys have a good weekend.
Perfect. Have a good week. Chris and I, every Tuesday from noon to 1, Cattle Office Reimagined in Prosper, Texas, offering lunch and learns every Tuesday. Some very valuable information we've been providing to agents. So join us Tuesday. We're going to have social media class going on.
Yeah, that'll be good.
Getting your social media brand in line for 2023. Don't want to miss that. Go to Eventbrite, the Oldham team, to sign up. Other than that, have a great week, good weekend, and we'll see you soon, Chris Madrid.
See you later.